Okay.
So it's not always a case whereby you get a refund. In some cases, when you file your personal tax, the assessment result is new. It's matching whatever the employer did, and it's new. And then someone asks, "This one got a refund. How come I didn't get a refund?" You get my
Same
point?
company.
Same. Yes.
You're justified.
I also want to know what happened there.
Some errors come from the IRP5. Let's say you have medical aid, you have commission, you have your gross earnings, and you miscalculate the pay as you earn there, for the whole year. That's where maybe you can get a refund. In some cases, it's not only underpaying and overpaying. Sometimes it's with that calculation. Maybe the gross earnings has made the payee more when he's putting your IRP5 than your gross earnings. Maybe you're going to get a refund, but then obviously it's an error from the company side, so they might get penalized for such an error because it should match.
Okay.
But on your side, you would have, sorted out the error. Yeah.
So in the case that, let's say you work for a company and it goes bankrupt and gets liquidated, right? Let's say this happens in March, right? And you're an employee of this company. It's post the financial year end. It's in the new financial year for this company. Let's say their financial year starts in Jan. So they've been running till March, April or whatever. And then they disappear, they get liquidated. Now you haven't been earning anything, right? And you start a new job, let's say in September, right? Or in December, you start a new job. Who's supposed to give you the IRP5 for that year?
Remember the company, it should give you the IRP5 because it's a system whereby whoever was the HR or the accountant who was dealing with the payroll should give you this IRP, whether the company is liquidated, but these are your records. It's just, the company has a tax profile whereby they might just pull out your information and give it to you. In normal instances, like when you're filing your personal tax, your information should be there. Even if you check it, it should be there because it links with SARS, Your certificate number for the tax certificate and the employer's pay-as-you-earn number, it matches under your individual tax, and then you should see the assessment result. So even if it gets liquidated, there's an option whereby it appears on your personal income tax returns, and you should be able to file the returns.
So, but where are you going to get the IRP5?
That's what I'm saying. It's going to appear on your personal tax returns.
Is it on e-filing?
In e-filing, it appears. So even if you don't get it, it's just going to appear. Unless SARS asks the IRP5 for an audit, maybe there's a discrepancy in the amount. That's when you have to, communicate with wherever you're working, and then they should give you because...
Even if the company is closed.
Even if the company is closed, but the records for SARS are there. But in the worst scenarios, you can easily go to the branch with your ID, and then they should be able to pick up all your information and just give you IRP5, or they'll file it for you that side, or you actually sort out your issues that side. In worst scenarios.
Problems.
So what usually warrants an audit from SARS? Like what are the main things they usually look out for when they make a decision that we're going to do an audit on this individual, that individual, etc.
Okay, I'll go back to Slim's question whereby he's saying, let's say I was earning a low amount, now I'm earning a higher amount. Right. You understand? They might look to say, okay, let's say last year you were earning just one amount for the whole year, and this year your amount, your gross earnings have grown at a higher rate than last. You can check what could be the discrepancy. Is it matching or there's an error from your side? Because they actually send you, please submit supporting documents. If there's an error, request for correction. Yes, if there's an error, but if everything is fine, just submit the supported documents. That's matching with the workings that have been submitted. But if there's an error, you obviously have to request for correction.
Okay.
Yeah.
So what do you do with donations? Like, should you file those under your personal income or what? Let's say I pay my wife a salary of 10,000 rand.
I think she likes the idea. She likes the idea.
So I'm not paying tax on that. I'm just, I'm donating the money to her.
Okay.
It's now in her.
To add on what he said, I think it's something that So Rob is the tax accountant for my company.
Yeah.
And initially, when I started, I was paying my wife a certain amount. But what then happened? She also then started working, right?
Yeah.
So SARS now she was showing at SARS as if she's earning, or she's got 2 jobs.
Yeah, exactly.
And at the end of that tax year, she owed SARS quite a lot. Really. So actually, on top of what Rex is saying, like what qualifies as a donation or as an allowance?
Okay.
That you don't have to then get in those issues of producing a payee or whatever the case is.
So when you are filing, there's actually a source code for donations. You have to declare the donations whereby you're giving your wife. If it's 10,000, the lump sum at the end of the financial year. If it's 10,000, you've said every month. At the end, maybe it's 120,000. There is a source code to declare that amount that you are donating to so and so forth. And if they ask, obviously, you have to justify the donations where you're donating them to. Because in most instances, it's not actually a donation to your wife. You get my point? You're not actually donating to your wife. Because, if it's if you declare it as a donation, maybe they are looking forward, probably donating to a charity organization and so forth.
Okay.
Not exactly to your wife.
Okay.
Because the way they would treat that amount, you're earning 30,000. You give your wife 10,000 every
So it's
month.
profit.
It's your money from 30,000 has already been taxed.
Yeah,
Whatever
yeah.
you're going to use this amount, it's your money
Of
at the end of
course,
the
yeah,
day.
yeah.
Yes.
So she wouldn't have to file
But
in her own capacity. That
She has to file in her. If she's not employed, she has to file.
Okay.
But it's also, even if she's working, it's additional income to where she's getting, and it's
How?
not being taxed from you to her.
So any money that exchanges hands needs to be taxed, is what you're saying?
Obviously, unless it's just a gift to her. But
Okay,
if
if
it's
it's a gift,
10,000, then
yeah,
it's like it's a fixed amount every month.
Yeah.
They'll regard it maybe it's like a salary or so forth. So obviously, you have to do the workings and calculate tax on her side. And then declare the amounts. You're not exactly.
There's no running away, Rex.
Also, like you're getting double taxed
Exactly.
Yeah,
for keeping money within your household. It's not the worst
Hey,
thing.
what if it's to run like household expenses and
Yeah.
Obviously, that's what I'm saying. Like it's additional income to her because it's money coming to her account. So you need to obviously justify those amounts. Where it's coming from. If it's household expense, this is just like your fees. You declare it. You have to declare it the proper way. It's not exactly like income. Maybe it's just to run the house or do certain things. It's money that you just have to declare the correct way. What is it for exactly?
Okay, so if it's to run a few errands for the household, do you get taxed for that?
In most instances, they won't be taxed for that because it's just to run the household. But if you don't, they would think it's additional income coming to her. Let's say she's working, she's earning 20,000. There's an extra 10 that's coming in. You get my point. Yeah. So maybe you just have to declare it the correct way to say, this money not additional income, but it's for this and this certain things. So because it's not coming from his account, you get my point.
Yeah. So what if it's 7.9?
Even if it's 7.9, whatever amount it can be, you can just declare the proper the way the amount was used. It's for the household. Then obviously that's personal. It's not like you're working for a company getting this money. It's just money to run the household. You just have to declare it the proper way, and I don't think you get taxed for because you're not working for it. You're just getting the money.
Yeah.
You get my point. But money that you've worked for from the employer, obviously, it's taxed.
All right. So that same scenario, if you put it now in, if you have a company,
okay,
right,
yes,
managing these kind of expenses, what is the benefit now when you have a company account paying into your own personal account or paying into your wife or family's personal? How can you manage it from a company account?
It's very difficult because under the company account, there's sales, there's expenses. What expense is it exactly? Is it a donation or in most instances, it's just going to go under income tax. You're going to declare it under income tax as director fees.
Director fees.
Director fees, yeah.
Okay.
In most tax scenarios, you just need to. Those are the director fees, anyways. That's going to the family or whatever.
Okay.
Yes.
So in a part where, let's say you're earning through the company.
Yes.
then you pay yourself salary.
That's a salary. Yeah.
Right? You pay yourself a salary. And of course, because of tax reasons, you also want to put yourself in a tax bracket that is not too high, right? To get less tax, etc.
Okay.
Then how do you manage your expenses on the company? Because now, of course, you still want to do the groceries, you still want to do fuel. Okay. So can the company now, can you expense through the company? Just say these are monthly expenses for the company.
Yes.
It's a running company.
Yes, you can actually do that.
Okay.
Yeah, you can do that.
So
Is that not stealing from the company?
No.
I guess it's in cases when you're self-employed.
Yes.
Where
Self-employed.
most of
Yeah.
expenses are actually
Self-employed and
under
you
the
have
company.
a company. Because you can be self-employed and you don't even have a company. As I've said, under personal tax, you need to declare whatever you made, whether you made a profit or you made a loss. And you pay tax on the profit, on the loss, you don't pay anything. So it just depends, if you're the company self-employed, as he had said, he pays some of the company expense, these expenses under the company. Those are director fees.
Like I'm paying, I work from home,
Yeah.
so I'm paying rent to my own house.
You pay rent, you pay water, electricity.
Yeah, paying water,
The company's
electricity.
one is
So-
paying for all of that.
So in that instance, right, we're staying with that same example. If I'm working from home, running my own company, am I charging myself rent for the company for 8 hours, or is it like
It's for the 30 days.
That's for 30 days. Also, is that a cheat code or is actually abiding by the law?
It's actually abiding by
It's actually abiding by the
Yes,
law.
because at the end of the day, whatever expenses went out from the company, you just have to calculate whether at the end of the financial period, the company was making a profit if all these expenses were paid, or it actually made a loss with these things, and then they have to pay tax or declare the losses that they made after the financial year. Yeah.
so you're saying that I can declare my profits as losses so that I can avoid paying tax?
Well, to be honest, Rex, you just have to pay what's there. Yeah, if you made the profit, you just have to pay the tax. If there were losses, because as I was explaining, saying, SARS will ask you supporting documentation
Right.
if you really made losses. Because remember, at the end of the day, they have access to your bank account. So they can check and, compare the workings that they did on their side or whatever you did.
But
So
I mean,
let's say
like company lunches.
So let's say you've done that way, you don't want to pay tax, you actually made a profit and you're declaring a loss. There's a high chance, they might do the reassessment from their side and say, hey buddy, you made a profit of around 20,000. You pay that money. Then they penalize you on that because you filed or declared what's wrong and not what's actually correct. So it just varies, you see.
I guess sometimes it's in the wording of how you, because as a company, of course, you are expected to have seminars. If
Exactly.
saying you're having a holiday trip or business, whatever. You are doing that. Even if you're self-employed, you're trying to go look for business elsewhere. But now if you're going on a business trip every weekend, I mean, that's when it becomes a problem.
That's why I'm asking about that 8
You're gonna have
hours. So
seminars
now
at
you
home.
can declare business expenses over the weekend when you're not operating.
Yeah, what if you've traveled on business?
Yeah.
Yeah.
Or you're having seminars at home.
Yeah.
Yeah, it's interesting. Yeah, okay. Yeah, go ahead.
So I'm saying in a way, they might ask simple things. Let's say you've been operating for 3 years, but you're declaring losses. They will ask you, why are you still running this business if you're making losses? What's the honest point?
Yeah.
Simple
I'm
as that,
passionate.
They'll ask you 3 years.
It will come right.
Yeah,
But
why?
you're declaring losses. What's actually happening? Because it doesn't make sense. You can still operate for 3 years, but you have losses.
declare losses,
It doesn't, even if economic sense, it doesn't make sense. So
Why are you continuing?
how are you surviving?
How are you surviving?
Yeah.
So tell me, I've been hearing most people that have now recently opened companies.
Okay.
Apparently, SARS is now automating the VAT activation for companies. Like before you used to go and VAT register on your own.
On your own, yeah.
But it seems like they're doing it on companies' behalf now.
Yes. So what actually used to happen with most companies, they were not abiding with the law. So the law says if you make more than $1 million in the financial year, it's mandatory for you to register for VAT. So they just check, as I've said, they have access to your records. They just check you're making $1 million or you've made $1 million in the past year. They'll just automatically register for VAT, and you have to pay, calculate, and now start paying for the VAT that you weren't paying before.
Oh man!
Wait. So you're saying the second that you're automatically activated for VAT, right?
Yes.
Do you start paying VAT from there going forward, or they backdated?
No, they're backdated.
Yes.
So the second that you become VAT registered,
Even if you've done it on your own,
are
even if you've
you're
registered on
already
your own.
No, if you register on your own, remember you're going to put when you want to start filing for the VAT. But as you have said, they automatically register you for the VAT. You obviously have to pay if they're backdated. They'll just give you a date from 2023. There's this client of mine, his company registered in 2019. Only this year in 2025 is when SARS automatically registered.
Sure.
And it was
So
backdated.
6 years he was coining.
it was backdated 6 years.
So, no, not 2019 to 2023. So
Because
from-
that's when
He started making those millions.
okay,
So
okay, got you.
2023, he has to file those returns correctly because they have the records. They want to see, okay, what we have the record. You cannot run away.
Yeah,
you know?
you can't.
So obviously, you have to declare what's actually correct from that period in time.
Okay.
For now, because some people don't know, they just operate.
They just operate, yeah.
You won't be like hands-on with these things. You just operate. You're making $1 million. You're fine. You don't know you have to register for VAT or whatever. SARS will just come automatically register, and then obviously you have to file. You won't be even compliant because they'll say you have outstanding returns from 2023. Yes.
So tell me this. I thought like having a VAT certificate or being VAT registered as a company was beneficial so that you don't have to pay VAT to other companies that you do business with. So if I buy, I don't know, burgers from Sasco, and I'm running a shop that makes burgers, I don't have to pay the VAT on their invoice. That's what I thought it did. It just nullified that extra expense.
No, so you actually have to pay VAT. So even if you're VAT registered, you actually have to pay VAT where they're buying from them. If they charge you VAT, you actually have to pay the VAT.
Oh, okay.
How I understood VAT
Yes.
is that when companies charge for VAT, they're just pretty much collecting VAT on behalf of SARS.
Yes.
That's what it pretty much is. Because SARS can't, go to every transaction.
Every transaction,
So companies do that on behalf of SARS.
So this is what happens. Is explaining if you reach the threshold of $1 million, you're making $1 million more a month. It's mandatory for you to register for VAT. And then whenever you invoice, whatever you're invoicing,
You have to add the VAT.
the VAT.
top.
And then whenever you're gonna go buy whatever qualifies to claim for VAT, you claim that, and then the difference, whatever you've collected and whatever you have collected for SARS, and whatever you've collected from suppliers, the VAT, the difference if you're gonna pay or claim.
Also, that's where the return comes from.
That's where the return comes
Oh,
from. No matter
okay.
the difference.
Okay.
So if the VAT that you issued out to clients is more than the VAT you collected from whatever you're buying, you have to pay.
You have to pay.
If it's less, then that's when you're due for a claim.
Oh,
Yes.
okay, got it.
And the
Got it.
items that you can claim VAT on, and the items you can't claim VAT on.
Okay.
Yeah.
Is there a fine line between it, or
It
would you
depends.
say there are certain goods that
There's certain goods that you can't
or
claim VAT.
services, like what, for example?
Let's say, as you're saying, burgers and stuff. You can't go claim VAT. on
Oh,
those
okay,
things.
okay,
You can't go claim on food.
okay,
Water,
okay. I get you.
Petrol is actually zero rate. If you check wherever you're gonna buy petrol, it's zero rate.
It's zero
Oh,
rate.
is it? Oh, I've never
0%
checked.
diesel.
Because
Okay.
there's already so much tax on that.
It's zero. You can't go claim tax on those things.
Okay, all right,
Okay.
all right.
But now, I've always wanted to know this. Like, you'll see, like, maybe a surge of, like, a car that's being sold. Like, and they'll tell you, like, no, this one, it's zero duty or whatever. Like, maybe everyone starts buying, like, a Porsche Cayenne.
Yeah.
Yeah, 'cause it's an expensive car. They're like, yeah, I wrote it off as a business expense. Like, can you explain that to me?
Yeah, so obviously it's going to come under the income tax calculation. But under VAT, the Porsche doesn't qualify because it's not for commercial purposes.
Oh, okay.
Only for
So
commercial
it's a
purposes.
particular, your
Yes.
bakkies and the likes are the ones that you can get
Not
away
all
with.
back is a single cab.
Okay, so if I have a business and my business requires me to be moving around a lot, and then I purchase a private car, not necessarily a bakkie, can't that fall under a business
company
expense?
car.
It's
Because
going
it
to fall
requires
under
me.
the business expense. But under VAT, you can't claim that I've bought this asset.
Okay.
You understand? Because, yes, of course, it's for commercial purposes. But as we were saying, the law, there's certain cars that they qualify for as for commercial purposes.
Okay.
Like those NP200s, the single cabs, those Hyundai, the small trucks and so forth, they are for commercial purposes.
Okay.
Because at the end of the day, you can say there's a high risk to say I've purchased this car for business use. Yes, it's for personal use.
Personal use.
You understand? Anyone can just go buy a four-door car, a small car, and say it's for business. You want to claim that.
I'm an
And
Uber
then on
guy.
the claim-
But
Yeah.
in that instance,
Yeah.
it might not qualify for VAT,
Yeah.
but it can qualify as a business expense.
Exactly. Yes. What I'm saying, it's
So-
going to go under the income tax calculations
Okay.
at the end of the financial year.
Okay.
That's where it's
All
going to come in.
Okay.
But under some cases, anyone can do that. As you were saying, I was just responding to the question whereby I was thinking if you want to claim it for VAT, you can't claim it.
Can't claim it. Okay.
Because anyone can do that. Anyone can buy a car, give you the invoice, and then you claim, and it's theft at the end of the day. That's why they try and avoid that.
But it can go as an expense.
Expense,
so that way
exactly. Yes.
It, it helps you with cushioning
Exactly. Yeah.
your tax.
But
Okay.
let's say I go and I buy a Toyota Corolla to become an Uber driver. How do I then manage myself? Because they say you're a private contractor.
Yeah.
How do I manage the vehicle as a business expense and my income? How do I declare all of that between all the cash transactions that happen as well as the online ones?
Okay. So if the expenses and the personal income, it's